Aloha, everyone. For those of you who are in person at PTC this week, I hope you're having a wonderful and well-deserved break from the pandemic realities back home. For those of you who, like me and my colleagues, are at home, I hope you're preserving your sanity, and I hope that you're at least able to make the most of this opportunity to gather virtually, catch up with colleagues, and listen to some good sessions. As always, it's a pleasure to be a part of this TeleGeography workshop with you here. And really, for me, this is always a good opportunity to take a break from the day-to-day work and reflect on what we see happening in the industry as a whole. It can be really hard to encapsulate what's going on in the data center market at any given point in time because there's so much happening in so many places, driven by so many different factors. But what I hope to do in our brief time here is to just give a brief view of our perspective on what's happening in the market and to hone in specifically on a couple of key metropolitan market developments that are intriguing to us. We'll also take a look at pricing trends and see what's happening in terms of co-location pricing specifically at this particular juncture in the pandemic and with other things going on in the global marketplace. So let's jump right in and talk about development. I want to start by talking about cloud region deployments specifically. If you've seen my presentations before, you've certainly seen this slide depicting the global cloud region deployments of the three largest global cloud players. And of course, when we talk about cloud regions, we're talking about coverage territories that comprise one or more zones with data centers for cloud service delivery. If we look at AWS, Google, and Microsoft, these three players alone have grown at an incredible rate in terms of their global cloud deployments over the last several years. Last year may not have been quite as rapid a clip in terms of new launches as in previous years, but it was still pretty impressive. AWS launched 2 new cloud regions in Jakarta and Osaka. Google launched in Warsaw, Delhi, Melbourne, and Santiago. And Microsoft added sites in both Sweden and in the US. When we look at near-term deployments in the pipeline, based on just on what we already know, these three operators alone are going to grow their regional cloud footprints by 35%. So that's pretty staggering considering the scale that they're already at. So where is the cloud moving from here in 2022 and beyond? What do we see in the pipeline? Well, cloud deployments are truly global across both key and emerging markets. Now, when you look at this pie chart, it might seem odd that 50% of new regions coming online are in Western Europe and the Middle East alone, but this represents a tremendous development blanketing Western Europe over the near term and a rush of deployments to multiple Mideast locations, which we're going to highlight in just a bit. When I look down a long list of where new cloud regions have been announced, a couple of markets stand out to me in the short term, particularly Israel, Italy, Spain, the US, because of the fact that these markets have multiple new cloud regions coming online at the same time. We're going to come back and integrate some of what we're seeing and, with cloud deployments with data center deployment on a more localized level shortly. But I want to switch gears briefly and look at overall data center market developments right now. So again, we see strong global distribution, especially heavy across North America, in this case, in the APAC region. So if you note the figure title here for the pie chart, we're highlighting development that has taken place over the past year in both the retail and wholesale markets. So when we talk about these markets, which we typically separate in telegeography analysis, I'm combining the two to highlight the totality of what's being developed in the data center market globally right at this point in time. So when we talk about wholesale versus retail, we're talking about more network dense multi-client co-location versus operators that are geared towards a more large-scale, long-term leasing environment, particularly geared towards cloud or large-scale enterprise. So one thing I noted when I looked at this figure and looked at the data that we were seeing was that there was kind of a clear regional drive that was separated separated by these two types of data center operators. In the APAC region, wholesale was very much driving development over the last year, very heavily geared towards hyperscale, towards large-scale enterprise development. Whereas in Europe, it was almost entirely the opposite, very heavily geared towards that carrier-neutral, more network-dense operating environment. In the U.S. and Canada, there was a much stronger mix. The other thing I wanted to point out on this particular slide is the bar chart at the bottom, which gives a sampling of the diversity of markets that had tremendous new deployment over the last year. And this bar chart also reflects the fact that so much of it was heavily focused in the US and in Asian markets as well. All right, so what do we see in the pipeline for the data center market? Looking forward, recall that in this previous slide, North America accounted for the largest share of recent data center launches. Well, looking forward, North America drops behind both Asia and Europe when we look at what's coming in the pipeline. Wholesale builds account for 60% of what's coming online as far as what's been already published right now. Geographically, there's a lot concentrated in China and India in particular. And the other thing I'd point out here is that, again, with Europe, the drive there is very heavily on this carrier-neutral retail type ecosystem. All right, so who are the operators that are generating all the growth that we've seen over the past year and coming down the pike? Well, it's quite a mix of both wholesale or hyperscale-driven providers and those types of operators who are spearheading development in the carrier-neutral interconnection market. It's quite a mix. A couple of things I wanted to point out here when we look at those who are deploying the most sites as of right now. Well, GDS is extremely active, developing numerous clusters of sites throughout China. The other thing I wanted to point out here specifically is that there's a tremendous influence from operators that have subsidiaries and joint ventures that are operating in new places. So, for example, NTT's developments include 6 sites that are from NetMagic, their Indian subsidiary. EdgeConneX has 5 sites coming online that are a result of a joint venture with an Indian company. And 12 of Digital Realty's new sites coming online are directly through its subsidiary Ascenti in Latin America. So the importance of having the right partners and having the right acquisitions seems to be really critical for many global operators in determining how best to strategically move quickly into new markets. And we see that reflected here. So I wanted to highlight a couple of regional market developments. When we look at the overall global developments, it's incredibly extensive, and there are many places that we could zero in on and highlight. But I wanted to focus on a couple of areas where we see a confluence of both significant data center development and cloud region investment happening right now. So first I wanted to talk about China a little bit. It jumped out at me really largely because of the scale of GDS development that's being undertaken in multiple locations. Let's take a look at this first location. Langfang sits between Beijing and Tianjin, which is also being developed by GDS, Chiora, and others. And in Langfang, GDS is scaling up tremendously here as Princeton Digital also plans entry, and Microsoft is planning its China North 3 cloud region for the Hebei province, where Langfang resides. We also see cloud region development moving into Nanjing with Alibaba in 2021, and what appears to be a backup or disaster recovery location for Azure coming online soon within the Jiangsu province. In Shanghai, we saw Princeton Digital open at the tail end of 2020, and a lot more development slated to come online there as well, along with Chayora and others. Moving over to India, there's been a lot going on both in terms of data center and cloud development here too. We see new cloud deployments with Google in Delhi and Amazon Web Service coming to Hyderabad. At the same time, here we see the influence of these acquisitions and joint ventures that we were talking about. NTT NetMagic is actively expanding across key nodes throughout India. EdgeConnect's joint venture Adonai Connects is moving into every one of these locations highlighted here and more. And there's tremendous development happening across the board. So there's a lot going on here to keep an eye on. We've been hearing, in fact, over the past year that there's been a real shift in India with more international network investment moving into the market. It's always important to be cautious about hype involving new markets, especially when there's volatility involved. And it's not at all to downplay the fact that there can be challenges in terms of logistics and regulations in moving into some of these new markets. But the sense of urgency is there, the demand is there, the potential is there, and that's reflected in the scale of development that we see happening in some of these locations. Along those same lines, we're also seeing a lot of development happening right now in the Middle East. It's noteworthy to see the amount of cloud region deployment specifically happening within this region right now. We see tremendous activity with multiple cloud deployments throughout Israel. Now, Oracle deployed to Jerusalem at the end of 2021 and is planning a Tel Aviv cloud region as well, along with several other cloud providers. Google's deploying to both Qatar and Saudi Arabia, along with Israel. Google's Saudi deployment is in Dammam, which is near the cable landings at Al Khobar. Oracle previously launched in Jeddah, Saudi Arabia in mid-2020, but also has a second region planned for the country as well. Now, the UAE, of course, was the first market in the region to really be zeroed in on as a potential interconnection hub. Microsoft deployed 2 cloud regions there in 2019, and Oracle followed in 2020 in Dubai. But Oracle also followed up with another region in Abu Dhabi a few months ago, and AWS is slated to enter this market as well. So, of course, this kind of cloud development isn't just happening on its own. This happens in combination with investments by data center operators, internet exchange providers, and networks in an attempt to generate momentum for interconnection market development. So there's a lot to keep an eye on here as operators sort of hedge their bets in different locations to see where market opportunities will develop. In Europe, we see a lot of data center and cloud development across the region. This was a really challenging one for me to highlight specific markets. Just in the last year or so, looking at cloud region deployments, Microsoft is going into Austria, Belgium, and Denmark. Google is deploying a second cloud region in Germany, in Berlin. But I thought it was worth pointing out 2 things here. One, major hubs are still getting initial cloud regions, as we see in Paris. And 2, there are several secondary markets, among which are Madrid and Milan here, that are quickly developing into sub-regional hubs in their own right. It may be surprising that Google is just now entering the Paris market with a full-blown cloud region, but there's still a lot happening in even in the biggest hubs in the market. At the same time, Equinix has been working on both xScale and retail development in Paris. Digital Realty is developing its own wholesale sites in addition to new interaction developments there. Looking at Madrid, its status as a sub-regional hub in its own right is quickly solidifying with 4 cloud regions coming online in short order. And in Milan, Google and Azure are deploying, and Oracle has recently opened a region where AWS actually launched earlier as well in 2020. Well, I want to switch gears briefly and talk about colocation pricing trends as well. I want to look at both the ongoing long-term characteristics of pricing in the market and the short-term volatility that it could affect key markets in the short term. So when we look long-term, the colocation market doesn't really shift that much when it comes to pricing trends. If you look at TeleGeography's other products, our network pricing, it tends to be predictably erode quite a bit. At least that's the general long-term trend. And in the colocation market, that's not necessarily the case. Based on individual market factors, individual data center pricing shifts, you can see prices go up or down. But over the long term, they tend to remain fairly steady. In fact, the long-term 5-year moving bands here for these regions has been fairly negligible. There's a slight downward trajectory in Asia, about 5% compounded annually, and that's partially due to sampling changes in our market average here. But there's not a ton of change over the long term. The same goes true for cross-connect rates, which, as you well know, can become a very critical piece when factoring in TCO for colocation. Not much shift over the long term. The biggest thing that remains a constant in this market when it comes to pricing trends is that you have these very consistent regional disparities. Going back to this previous one, again, tracking long term, it's very consistent that major hubs in Asia are going to be the most expensive places to do colocation, followed by those in Europe. When you look at cross-connect pricing, US markets will predictably be the most expensive, followed by Asian markets and then European markets. The big thing I would point out here is that while there hasn't been much change over the long term, that European trend line has actually risen somewhat, about 10% compounded annually, despite that hiccup there in the near term. So European prices are creeping closer to those seen in US and Asian markets, but are still quite a bit lower. This bears out within individual markets too, and this figure reflects what we just saw. In every one of these markets in isolation, the Asian hubs are typically the most expensive for that base retail colocation rate, followed by European and North American hubs. And this came right out of our latest biannual pricing update from H2 2021. I thought it was quite striking that the numbers came out quite predictably along the lines of the regional averages. And likewise, the cross-connect rates. Predictably, the cross-connect rates there in light blue and US markets were far higher than in the others, followed by Asian markets and then lagging below, much more competitively priced to the European markets. But one of the things that we ask operators in our biannual pricing survey is what their expectations are for near-term changes. And here, again, shifting from that long-term perspective to the short-term, we had an interesting result come out as of H2 2021. We typically hear from operators that they don't expect much of any change over the next 12 months or so. But in the H2 update, we saw a resolute shift in sentiment towards near universal expectation of inflation. Most of that was a slight increase, which is up to 5%, but a fair amount was moderate, which can go as high as 10% inflation expectation. That was particularly noteworthy amongst the operators that we surveyed in Singapore, where they indicated that they expected prices to go up to 10% higher in the near term due to extremely limited capacity in the market. We had similar sentiments coming from operators when asked about cross-connect pricing too. Not as consistent, more mixed, but definitely expectations for rising rates there as well. So what would be driving these short-term changes in pricing, these short-term expectations for inflation? Pretty predictable factors, as it would turn out. Certainly the pandemic would be chief among them, although I'd have to say that since the beginning of the pandemic, we've really seen mixed effects on colocation pricing. There's been tremendous demand from certain sectors and a lot less demand from others, and that has affected pricing in individual data centers and markets as a result. So wherever you see heavy concentration of cloud and network, there tends to be heavy demand, and certainly that increases the price pressure. Whereas in markets or data centers where there's more of an enterprise focus, perhaps not as much, as enterprises suffer, certain enterprises at least suffer from the effects of the pandemic and scale back network accordingly. But overall, as project and supply chain delays continue to pile up, price pressure for existing capacity will continue to grow. Other factors include geopolitical concerns and regulatory constraints. Of course, in Hong Kong particularly, we still have uncertainty regarding the long-term stability there. And as demand perhaps moves increasingly to Singapore and elsewhere, where pandemic logistics mix with regulatory constraints, that can add constraints elsewhere as well. On the regulatory side, we have ongoing evaluations of the effect of the data center market on the environment in both Singapore and Frankfurt. The moratorium on new development has been lifted in Amsterdam, but the effects of that evaluation process are still ongoing. So when you mix these things together, the logistics of pandemic, the logistical constraints as a result of the pandemic, regulatory evaluations, there are plenty of reasons to expect some degree of price pressure, at least in certain key markets. Well, a few takeaways as we wrap up this portion of the workshop. Despite the global challenges that we see, there's still been tremendous global development in the interconnection market. There's been a heavy concentration of hyperscale-focused development across the APAC region, strong carrier-neutral development in Western Europe, cloud region development filling in gaps throughout Western Europe and moving into the Middle East and elsewhere. To some degree, it's certain that capacity and logistical and regulatory constraints in the major hubs of Asia and Europe will continue to push development deeper into localized sub-regional markets. But I'd add that at the same time, many of these sub-regional locations will have limited room for growth due to, first of all, their size, which would result in quick market saturation as investment rolls in quickly. And two, the ongoing volatility and operational challenges, particularly in some of the emerging Southeast Asian interconnection markets and other locations with higher volatility. Well, as global and regional operators continue to eye opportunities in new markets, we'll also expect to see more entries through joint venture and acquisition. And of course, beyond those that we highlighted here, we're seeing lots of that in other places in the market as well. Lastly, when it comes to pricing, there's no doubt that price pressure will be a concern in the near term as we work through the implications of pandemic-related logistical challenges and regulatory pressures. That's all for my portion of the workshop. Thanks so much for your attention, and I'll pass it on.